Joining me now, Jordan Trimble, President and CEO at Skyharbour Resources. Always great to see you, sir.
Great to see you as well. Happy to be here.
And there's always so much going on at Skyharbour. So can you give us distill what you've done this year in terms of drilling at the flagships, Moore Lake, Russell Lake, and then I know you've got 37 projects and all sorts of partners, so give us a snapshot if you could.
Yeah, so 37 projects, over 1.5 million acres, one of the largest land positions in the Athabasca Basin. We added to that earlier this year. We had that announcement out, but the focus is on Russell and Moore. And we drilled now, just wrapping up 16,000 meters of drilling, about half of that at Russell, a little more than half that at Russell, the other half at Moore Lake. All the assays are pending. We're very, very excited with what we're seeing. This is going to provide ample news flow right through the end of the year into next year. Most importantly, it's going to set the stage for us to embark on another very large drill campaign next year, following up on the results from this year. Now, it's important to note, too, that in the summer, we announced some high-grade results at our Moore Lake project in a big step-out hole, 40-meter step-out hole, up to 5%, just under 5% over 1.5 meters in a new area that we weren't, we didn't know whether there would be high-grade there. So
that's east of
Maverick East,
yeah.
Correct. So we drilled along strike, and again, relatively shallow mineralization. So very, very happy with that. And the drilling that we're carrying out more recently is following up on that, as well as drilling at some other targets at Moore Lake. And at Russell, as your audience knows, is a very strategic asset in our project portfolio. Big property on one of the most prolific exploration corridors in the Athabasca Basin, adjacent to Denison's Wheeler River project. Numerous targets there that we've drilled this year, including following up on some high-grade mineralization, up to 3% U3O8 that we drilled last year at the Fork target. So this is a very, very important project in our portfolio. It's a large project in our portfolio. Road access, power lines, an exploration camp there. That all brings our drilling costs down. So a lot of news flow coming from these two assets over the next 3 to 6 months. And that, again, will segue into next year's drilling. And then just one final note with the other projects. We've had a number of our partner companies complete drill programs this year and are planning for upcoming drill programs. We'll see an additional probably close to 12,000 to 13,000 meters of drilling between these various partner companies in 2025, and lots of assays coming from those partners as well.
Let's pull back the lens here and look at the macro sector for uranium, nuclear. You're very good with that. You follow it closely. So we saw the U.S. government recently strike that deal with Cameco and with Brookfield, $80 billion to build reactors. So that's just the latest leg, the latest sort of push from behind for the sector from the U.S. government. So what do you think of that deal and just overall sentiment right now in the sector?
Well, look, that announcement a week ago was really a watershed moment, in particular for the nuclear sector in the United States. Now, we saw earlier this year the Trump administration with a couple executive orders that were clearly going to push the agenda, the nuclear agenda in the United States. They're talking about quadrupling nuclear capacity by 2050, a very lofty goal, but a very important one. This really is, I think, where the rubber meets the road. This announcement where you have the government, the U.S. government coming in to the tune of $80 billion. So that's 10 to 13 new AP1000 Westinghouse reactors that could be built over the coming decade or so. That's millions and millions of additional pounds of demand coming on the market. And keep in mind, too, just loading those reactors to start the reaction itself, the upfront requirements are quite significant, right, in terms of the nuclear fuel required. So it's not just the ongoing demand, it's going to be that upfront requirements for these reactors that'll be coming on in the United States. So again, a major commitment by the United States government using the Westinghouse design. Very positive news, obviously, for Cameco and for Brookfield and for the sector as a whole. This is going to be very interesting, too, because I do think it's going to really kind of help facilitate other Western countries now to go out there and to, I don't know if it'll be as aggressive and as large as this announcement, but I think it kind of paves the way for other Western countries to really double down on nuclear as well.
There's a lot of question as to where is this supply going to come from. You've updated us before on global demand for electricity and uranium. What's the supply deficit like right now, and are utilities more and more starting to realize that we're kind of up against it here?
Well, look, there's a major structural supply deficit. You have primary mine production of about 150 to 160 million pounds of U3O8 a year. That's in the backdrop of very rapidly growing demand now that we're expecting to come in around 200 million pounds. Now, that is not including small modular reactor demand. That's not including some of the some of these recent announcements, like we just talked about, the new demand that could be coming from that. So there's a major structural supply deficit. Most primary mine supply still comes from places like Central Asia, certain African countries, places that are less friendly to the West. And so the big thing will be security of supply. Where is the US? Where is Canada? Where's Western Europe going to source long-term secure supply? There's going to have to be money spent developing new mines and projects in North America, in Australia, right? In other parts of the world where we can rely on Western supply to meet Western demand. Now, as far as electricity demand goes, again, electrification is a massive theme right now globally. We need more electricity. We need clean, baseload, emissions-free, reliable, safe, affordable electricity. The only source for that is nuclear, right? We're expecting electricity demand to grow by 50% through 2040. The advent of AI, cryptocurrencies, electric vehicles, you name it, that's all adding to it. And we've seen now in the last year and a half, a number of major announcements from big tech companies, right? NVIDIA, Meta, Microsoft, Amazon, the list goes on, of these, the largest companies in the world with the deepest pockets signing agreements with nuclear companies, whether it's investments in small modular reactors, power purchase agreements like you have with Constellation and Microsoft and Meta and Constellation, the restart of reactors like at 3 Mile Island. There's been some major headway made in that area. And so having those deep pockets, those hyperscalers, the big tech companies come in, that's a new player in this market that I think is going to turbocharge the sector.
Right. And so still with the AI data center boom, you mentioned all that money those big hyperscalers are spending. Some say it's getting a bit stretched. It's maybe in a bit of a bubble, but you use the word turbocharge. Is that what it's doing to the sector, and is it sustainable?
Yeah, I mean, look, I think, getting back to the supply demand fundamentals, those numbers that I threw out there, that's not really incorporating a lot of this potential new demand, right? So we didn't need to see this turbocharge, if you will. It's really at this point, I think, really kind of icing on the cake. And, we'll see. I don't know if the market has fully priced in the potential. I mean, yes, certainly some, there's been some larger cap companies that have performed quite well, but I don't think we've seen it really trickle down all that much into mid cap and smaller cap, in particular uranium mining companies. So that's telling you that, the market, I think, is still kind of, looking at it going, okay, maybe it transpires, maybe it doesn't. But I think there's a lot of potential value to be unlocked there. If you look at the data center demand in 2024, it was just over 400 terawatt hours. They're expecting it to grow to over 950 terawatt hours by 2030. And these data centers are very energy intensive. You need a lot of electricity. Renewables like wind and solar just really don't cut it. You need baseload electricity, and that's where nuclear really has a role to play. And again, I think even a little bit of that demand that's being talked about coming online will have a major impact on this sector.
Thanks for your outlook today.
Thank you.
Good stuff. Thank you very much. Jordan Trimble, President and CEO at Skyharbour Resources.